Good morning, it's Wednesday the 10th of May. This is the Phoenix Blue update brought to you this morning by Tom Colley. I'm sure I don't need to tell you that we've had a relatively quiet start to the week, the first couple of days of the week. We've seen some dollar strength and the euro selling off following the French presidential election, but very little news in the market has restricted market movements and meant really we've been looking predominantly at technical levels intraday as areas for trading. So let's just have a look at what we've got ahead for the news. I said we haven't had much so far, a bit more today. We've got Draghi, the ECB president, speaking at 1 o'clock. So be aware of that if you've got any entries waiting on the euro or whatever. As always with these speeches, it could be tailored specifically to the event and not be general and have no impact. But conversely, it could be exactly the opposite and have a lot of impact. We've got the crude oil inventories, which obviously you need to be aware of if you're trading crude or the Canadian dollar. Crude fell quite strongly, or very strongly last year. It then bounced off about $43.50 quite hard and is now somewhat in a triangle, reflecting the rest of the market weighting. It's broken a long-term upward trend line, and it would make sense to be watching that for the potential of a BPR trade to the short side. The main event today is this evening European time, and that's the RBNZ rate statement and official rate. We're not expecting a change of rates in New Zealand. Possibly the most significant point of it will be the press conference. I think if you look at the Kiwi chart, again, it's a chart that's consolidating into a triangle formation. I think potentially what the market's looking for is in the press conference or in the statement for some indication of whether the Reserve Bank of New Zealand is content, more content with the level following recent falls of the Kiwi, or whether it would still like to see further downside. And I think that will, any comments on that in either direction will potentially be a driver in that market. Our bias is to the long side. We had a COT extreme signal for a couple of weeks ago. So we're waiting to see if and how that plays out. So that's something I'm sure we can comment on tomorrow or Friday once we've seen the results of the rate statements, etc. So over to the charts. Dollar index here, interesting in that we've had a break from the first round of the French elections. We've had the gap. We had a break below this long-term multi-year trend line, or in 2016, mid-2016, so it's over 12 months, that trend line. It's what we've been watching. We've always been content that our bias for the dollar was bullish above that side. We're now retesting the lower side of that. So what happens next will potentially give us some guidance, but you can clearly see we've had two big strong bullish days on this chart, driven by bearish days on the euro. Key level through the point of control of this triangle here is key level at $100. Clearly any break above that will put us into stronger bullish territory. Any break below this low here, and we're going to see a more significant sell-off and dollar weakness, and we'll see other markets, particularly the euro, on the other side of that. Over on the yen, well, the yen's continued to take advantage of that dollar strength as such, and has been weakening into it. It hasn't been pulling back very strongly. You can see I've got an intraday entry here where I'm looking back for a pullback to a specific level for a short-term 2-to-1 type target there. Next key levels you can see I've got marked here. So we'd expect price to either reach this level before pulling back more significantly, or breaking that level and moving through to the next one before taking a more significant leg down. This chart, rather more than excuse me, the dollar index, does suggest a more bullish US dollar. And the reason for that is here on the euro, where we can see we've had the big sell-off for 2 days following the French presidential election. That was very much expected result, so it was somewhat by the rumour sell the news scenario, and that's exactly what we saw after the weekend there. We've clearly got a level through here that's significant. There's a lot of openers and closers and tips, previous levels through here. We're above a similar triangle on here as we are with the on the dollar index. Yesterday or the day before, I looked at this quite closely, and I think this level through here at about 1.076 correlates with the $100 on the dollar index, which would make some sense. So we could see price on the euro pull back to that level, and that would be key to us in terms of this market going further. So a pull back to that level and move off to the long side again gives us more euro bullish bias. Obviously any break below that and our bias would fall back down to the bearish side on the euro, although our overall bias at this moment in time, one has been all year, is we are still long dollar short euro, but we're obviously aware of the technicals on the chart, and for short to medium term looking at other scenarios. Similarly to the euro, we saw a weakening of the Swiss franc. We saw two big bullish continuation bars. I'm watching a level through here, which looks like a retest of the upper side of this triangle, has significant interactions through here, and also is a level of a fib between the open end of the triangle, as I call it, which is where I like to put a trend. There's an overlapping fib there, so that's the level I'll be watching intraday if we see that pullback. Certainly intraday, I'm only looking for small targets and the trade to close before the end of the day. Over on the pound, well, we appear to be forming this type of channel formation here. Not a lot of clear direction in this market. I'm interested if price reaches the these previous highs here, we might see an intraday reaction at that point, or if we break through that, we'll be looking at an interaction with the top of the channel. But again, not a market that's very clean in there to have a look at. So we'll possibly be waiting for the market to break out of this channel in the first instance before we actually move into the market and do risk our capital. Over on the Aussie, well, after a big sell-off last week, we've seen the Aussie continue to sell off into that dollar strength. Couple of intraday levels that I'm watching, one clearly already been reached this morning when this slide was taken. I've got another level through here that interests me if price pulls back, and I've actually got an end of day order that I've had sat in the market since Sunday night as a clear level through here. So if we do get a pullback, more significant pullback on price, I'm not thinking that's actually going to be more likely the case. I think we'll see a shorter pullback and further lows, and that won't come into effect. But the nature of a trade of that nature is that the level always remains valid. It's a technical level. If something big happens in the market, there's a strong possibility that price would come back to a level such as that, blowing through, should we say, more anticipated intraday levels. But if you do your back testing, you will see that even when we get big moves, they will tend to move to significant levels quite accurately and stop that point. So I'm comfortable to have that there. I don't expect it to trigger, but if we have an unusual movement, it would be a high probability point for an entry to it for a trade. So I'll leave that trade through till Friday afternoon, because it's based on my weekend analysis. Okay, guys, that's it for today. Not a lot out there. It's a time to clearly wait for the markets to give you some confirmation. This is a really significant part of trading, is being able to sit on the sidelines, not feeling pressured into taking opportunities that aren't high probability just because you've got nothing there on the table. Remember, we're not trying to achieve returns of 10% a month and things like that. We're looking for quite modest returns to multiply out through the year and give us a decent return for the year. So in a market such as we've got at the moment, until something affects price movement, we get some more significant movement, it's time to sit on your capital and protect it for times when there are more opportunities and better potential for profits. Okay, that's it for today. We'll speak to you again in the morning. Have a great day and take care. Goodbye.